Google is one of the biggest tech giants in the world, but is it still a good investment in 2025? That's what we're going to be going over. With the rise of AI, regulatory challenges, and competition heating up, can Google continue to dominate? So today we're breaking down Google stock. We'll analyze its financials, valuation, growth potential, and risks to decide if it's a buy or sell. So currently, Google's market cap is 2 trillion. It's trading at a 20 PE, price to sales of 5.8, free cash flow yield of 3.59%. Google makes money from multiple streams, but advertising is still its bread and butter. Search and YouTube ads drive over 80% of its revenue, and Google Cloud is also growing. They also invest in high risk, high reward projects like Waymo, AI, quantum computing, and that's something that they put under other bets. So this is what everyone is worried about, Google search. So if you look at Google search, everyone's worried that this is going to disappear basically, although it's growing every single year. I think personally it's not going to disappear. I do think that AI is going to kind of take some of the market share. Right now, Google has 90% market share in search, but I also think that they are set up the best to benefit from AI search. A little bit behind with Gemini, but I think Gemini is getting better, and I've already seen it introduced into a lot more products like Google Sheets, and also they have Google Maps that they can introduce it into. So I just think that they have the advantage in search and also implementing Gemini into search. If we look at YouTube ads here, YouTube ads are growing. I think their biggest growth right now is coming from Google Cloud, almost 30%. And Google Cloud is, I believe, the third largest right now cloud provider behind Amazon and Microsoft. And the whole cloud business is set up to grow over the next 10 years. So I think Google Cloud is going to grow with it. And I think they could overtake Microsoft and become second place in the next 5 years. So if we look at their cloud operating margins, they have become profitable on Google Cloud, and it's also continuing to grow. I think this is a very good sign for Google. And I think this could be the future of Google as they grow this Google Cloud provider. So let's talk about Google's price to earning ratio. This is one of the most widely used metrics, but often it can be misunderstood. So right now, if we're looking at the past 10 years, I believe their average PE ratio has been around like a 22 to 25. And we can see it got all the way up to 60. Some of the lows have been, I believe it got as low as like 18 or 17 down here in 2022. Right now it's at a 20. So I believe it's trading a little bit lower than its average. For comparison, Microsoft trades around 30 to 31 and Meta is around 24, 25. So does that mean Google's undervalued? Not necessarily. I think that Google never really gets the credit it deserves. It continually beats earnings, continually grows earnings at a high rate. And it just doesn't seem like the market really respects it or values them at that high price to earnings. So if they continue to grow earnings at a very high rate and they continue to grow their cloud business and figure out AI, then I believe that right now trading at a PE of 20 is very cheap, and we'll see very high returns from them. So right now, analysts are estimating that Google's earnings will grow at around 12 to 15% annually. If that holds up, today's valuation definitely looks very reasonable, maybe a little bit cheap. If growth slows, or if these regulatory risks materialize, if they have to sell off Chrome, or something happens where they break up this monopoly, then obviously that's going to be devastating for Google. But if they do grow at what analysts are expecting, then this should be a very, very profitable company, and the stock price should show that eventually. So I plugged in Google's financials into my spreadsheet here. As you can see, revenue growth, it's growing every single year. Cost of goods sold growth is also growing, but a little bit lower than revenue growth, which is good. Net income growing almost every year. 2022 net income did not grow, but still we can see that this company is still growing very fast. Earnings per share, if we look over here, this chart, it's not perfect, but it's going up. So down here I have the analyst estimates, a few years. So they're estimating around 11%, 10%, 11% growth rates. Net income, they're estimating grows at about 10% as well. And then earnings per share growth, they're estimating 12%, 14%, 14%. So these are really high numbers for a growth company this size. And I feel like it's not being valued properly just because everyone is scared that AI could take over search and they could lose all that revenue. So here are my assumptions. If we assumed a 21 PE, a share reduction of 2%, and current share price of 165, based on these earnings of estimates, you're looking at a 15% return based on the PE. And I think this could even go up to 23 or 24 in the future. Sentiment changes, and then you're looking at 25% return to 18% return. So everyone has been worried about Google and their search volume going down. They recently released that they have more than 5 trillion searches per year. And this is up from their last release where they said they have 2 trillion searches per year. They also said that they think AI will expand search. So there will be more searches and the whole search market is going to grow. And I think if the entire search market grows, even if Google loses some of their market share, since they're at 90%, they can still grow their total searches and actually continue making more money. So this is very good for Google. And I'm optimistic about the company. I see them growing search. I see them growing cloud. I see them growing Waymo. I really just see them as an undervalued company right now. If we look at their free cash flow has been growing pretty steadily over the years. It sort of slowed down here in this last year, but that's also because of their large CapEx expenditure. And they also just announced that they're spending, I think it's another 80 billion on CapEx. And I think that's why the stock is down so much. From what we hear, everyone wants more cloud space and Google Cloud's growing, and Amazon and Google don't have room to take on these new clients. So I think that spending on CapEx and growing that is beneficial to the company. And I think they'll have a high return on their CapEx. Don't believe we know exactly what the CapEx is for. I don't think they outline that, but I would assume it's for Google Cloud. If it is for AI, that could be good as well. So we just have to see what that is being spent on and then the return on that to really determine if it was good or not. So what are your thoughts on Google stock? Do you see it as a buy or a sell? Share your opinions in the comments. Don't forget to subscribe for more in-depth stock analysis. And I'll be doing some more videos on different companies here shortly.